Hello, this is Somi Adiagbo. The market will be open in some hours time, and I feel there is a need to discuss one or two things about what we expect the market to do in the coming weeks, in the coming days. All right. So the page you are seeing on the screen is my blog page with the URL forexsnipersignals.com. Right. On this blog, I do intraday, daily, and swing analysis, long-term analysis of major currency pairs, gold, and sometimes I do stock indices and also some American and the other stock markets of the world by using the incredible power of the Elliott 12 principle, right, and other sound technical analysis to forecast where the prices of this market could be in the coming days, weeks, to a certain degree. Right, and the last one that we did was in the gold, okay, the intraday view of the gold after we looked at this pattern, okay, this terminating pattern here. Pattern was complete and we're expecting a break out below, and then we're looking at a target of around 1,300 and 1,250 dollars, and afterwards we saw price having a throw over. A throw over is a slight move, a sudden move above the top of this formation, and then price coming down immediately. All right, and now we're looking at this, and an expectation of an impulse wave was rating, and expecting an impulse wave, then a pullback, and then market to continue moving downside, and then looking at the target 1,300 and 1,250, which are our realistic targets. Okay, but this is what we had. After this, we actually saw a spike downside initially, which was actually moved by the non-farm period. But before that, let's look at how we can or how we used volume analysis to confirm the termination of a particular pattern. All right, normally when price is moving upside, okay, when in the market that is bullish, okay, the strength of the bullish can be confirmed by the volume. If the price is moving upside and the volume is also trending upside, that shows that there is a bullish market, a strong bullish move. Okay, the same thing downward. If the price is moving downward and the volume is increasing, then there is also a strong bearish. But if we have the other way, that is why price is moving up or why price is moving down and then the volume is moving down, that is a sign of weakness within the market. Okay, and that was exactly what we saw here, and why we thought that price was actually going to start moving downside in a couple of days or maybe a week time. So we saw this move here, okay, after this powerful surge that we saw around there due to the Brexit Brexit election that was held in the United Kingdom. We saw this very fast move upside, and then we saw price moving upside, in this manner, in this terminating pattern in the diagonal manner. So price moved up here, and then from here we saw the volume stylishly coming down. Okay, so we saw a brief move downside, then we saw price moving up again. But what happened? Instead of the volume to rise, what did we see? We saw a falling volume around here. Okay, a falling volume. So this is a falling volume from here down to here. As price moved up, we saw the volume move down. Here also, as price moved up, we saw the volume. Well, that is actually that showed that there is an impending weakness, okay, within the market. Okay, and now, not surprisingly, we saw price moving downside, okay, very fast, which we can also say that it was triggered by the better than expected non-farm payroll that was released by the United States government, United States statistical department. All right, and then we saw this move downside. We can look at this and see if this pattern is actually going to hold, because after this spike, this is a move upside, and then this is so scary, price could continue moving upside. Okay, and how prepared are we for this? Before we look at our preparation, we can look at how we will analyze this using the Elliott 12 principle, and then the volume price analysis. Okay, now we can zoom out this and see clearly. This is the we can go to the 1 hour chart. The non-farm period was released and we saw the spike down. Okay, the spike moved very down, very down. I mean, moved really downside. But before that, we saw a choppy move here with this choppy volume also. That means there was not much interest there. But when the non-farm period was released, most of the time during these releases, we see the market makers doing a lot of stuffs, and this price moved downside here, and then it moved upside very fast, and we could see the volume was high. Okay, the volume was high. After that, it stopped here. Then the next 1 hour, price moved upside again in this very large volume. So this shows that there were still some buyers. Okay, some buyers in the market. And then after this move here, price fell suddenly. Okay, and then we saw price moving upside. But while price was moving upside, what did we see here? We saw the volume, okay, moving down drastically. Okay, in the last 7 hours of the day, okay, the last 7 hours of the trading that trading day, of that trading week, we saw volume, okay, moving downside. See price moving upside, and then the volume, okay, moving downside in a very drastic manner. So what is this telling us? This could actually mean that this move here is not actually a strong one, and probably the buyers don't have much of interest in this position, in taking the gold market upside. Probably they've surrendered. This could actually be the activities of the market maker to see if there are still more buyers. But looking at this, the volume has actually dropped. So when the market opens, okay, trading this week, and we can see the price could probably move down, okay, and then start moving down to this. That will mean that this pattern is going to hold, all right, and then we can see the short-term wave count as this. Okay, the move from here to here is wave 1, and then this is wave 2, and then we're going to be preparing for a 5-way move down, wave 3, wave 4, wave 5, and then price could move to this target here or here. But conversely, this move upside there, the market could actually resume, and then we may see more buyers. More buyers say, okay, this thing is moving up, probably let's join this. There could actually be more momentum for the up more momentum upside. Okay, it's quite possible. So how prepared are we for this? If price does not move down and break below here, then we could look at this pattern. Okay, that means this is another pattern. Okay, a wave 1, 2, 3, 4, and then the 5th wave forming a typical ending diagonal. So if price does not break below here now, that means that we could see a bit of a choppy move down, and then a move upside down to this place before price now starts moving downward, which is going to be a very volatile one. Okay, we expect it to be a very fast one, okay, to get to this level or to this level. So we are prepared for this. But conversely, if price rally far above this level, okay, in a high momentum, and that's going to show that this analysis is going to be rendered invalid, and then we can look at the market in some other way and see how we can still put the market in the structure of a very sound wave analysis. So that is what I have for you. So we're going to be patient with gold and see what price actually has in store for us. Okay, are we going to have a break below here this week, or we're going to see more movement upside before price crash down? But we favor a bearish move. We're very bearishly biased, if I can put it like that, bearishly biased, okay, for gold, because if you look at all the momentums are really high. Okay, it shows that the price of gold has been overbought, and then a big fall is imminent. So if it's not going to be this, then wait for the last leg, and then price is going to move down. So that is what I have for you on gold. So you can always check my blog to see more, more videos. You can click on the video analysis here and see more video analysis of the market recorded. Probably you're going to learn something. You can also join our Facebook group. If you click here, our Facebook page, okay, we usually upload things faster there, even before we put it here. Or you can join our mentorship program, or you can ask for our 3 times a day analysis on each currency pair. We're talking about 10 currency pairs, whereby you're going to get 3 wave analysis a day for a price of $50, and within that you're also going to get viable trading signals, okay, that you can use to trade the market. And besides that, you can also use our analysis combined with your whatever trading system that you use, being it anything at all. And then we using the Elliott 12 principle and your own our analysis, our trade signals, and yours success is inevitable. So this is Somi out there. I'm going to see you within the week. Definitely I will see you within the week. All right, enjoy a very successful trading week. I will see you soon. Bye.